In today's video, we're going to do a deep dive inside of Johnson & Johnson, specifically taking a look at its earnings tendencies. Johnson & Johnson has earnings coming up on April 18th before the market opens, and we're going to use all of the different earnings tools that we have available to us, and we're going to apply them to understand how Johnson & Johnson trades pre-earnings, how it tends to trade the actual day of earnings, and how it tends to trade post-earnings once we have the information behind us. Now, if you haven't already seen this video, this is a 54-minute guide that we made on how to trade earnings using the 3 different earnings tools we have. I'd recommend watching that first. It gives you some necessary context and it will really show you how to use the tools I'll talk about in today's video. Now, starting first with pre-earnings inside of Johnson & Johnson, if I load in our pre-earnings analysis tool, and we can shift the number of pre-earnings days down, given that we're now within that pre-earnings day window, should be 2. Okay, so 2 days takes us to Friday's bar, and then we have just a little bit of information that we can start to gather. Now, starting from this point where really we have the closing price of this candle, we're looking for price action as we head into earnings to rise about 65% of the time and tend to fall about 35% of the time. So while not heavily biased, it's not something like 80%, we are seeing that the bias tends to be on the bullish side with price action rising as we head closer and closer into earnings. Now, what happens if we trim this down from 2 days to say 1 day? So now we're the day before earnings. That has yet to come. There, if we take a look at the percentages, 63% compared to 36%, 12 versus 7. So still the bias more towards the side that price tends to rise as we get closer and closer to earnings day here. So our bias so far as we had pre-earnings is definitely a little bit more towards the bullish side. Now, if we take a look at price action without any indicators for a second here, we can very clearly see this range that Johnson & Johnson has been trading inside of. So a bullish break would really only take place if we break above the high of this candle, call that 166.33. That's where I think you could start to add notion that, hey, there's some sort of pre-earnings momentum taking place here. Otherwise, we really just expect this chop to continue with maybe just a little slight movement up higher here. Now we move on to the actual day of earnings, and for that we can use our Smarter Earnings indicator. And if I load that in, this gives us information on how to trade the actual day of earnings inside of Johnson & Johnson. Now we're using 5 years worth of data here, 20 total earnings that we're analyzing, and there's a few different things that stand out. Now be sure to watch the video for a detailed description on all of these labels. I'm just going to talk about the labels that stand out. Label number 1 is the scenario in which if we get a gap down, then and we have earnings that's a beat, then we tend to fill that gap about 2 out of the 3 times that that's happened. Now, the reason I find that interesting is we have this open gap down here. So if we do have this gap down sort of idea, maybe filling this gap, then that still lends to some idea of being able to fill this gap, or at least historically that's happened. Now, that's only if we have an earnings beat, and this scenario is dramatically less interesting than something like the gap up and go on the bullish scenario if we have an earnings beat as well. So if Johnson & Johnson reports EPS using the built-in thinkorswim data here that is better than what we estimated, then that would be considered a beat. And 5 out of 5 times previously, if we've gapped up from there, we've continued trending in the direction of the gap, which here would be bullish. And on average, that move has been about $2.32, and the lowest move that we've had if we've gapped up has been about $1.25. So if we sum all of that information up, really still sticking true to that bullish tendency inside of Johnson & Johnson, if we have a gap down, there's a decent chance that gets filled if we had an earnings beat. But what we're really hoping for more than anything else is we have an earnings beat and we have a gap up. Then we're really playing with this scenario right here, the gap and go, where we know the average move along with what the lowest move has been over the past 5 years. Now we move on to after earnings. So this is now the day after earnings. We have information behind us. We're looking at what tends to happen 7 days post earnings here. And if I click OK, apply, we get similar information to what we saw with our pre-earnings. Now, 7 days post-earnings inside of Johnson & Johnson, we see that price tends to rise about 55% of the time, tends to fall about 45% of the time. So really call this about a 50-50 split, maybe tilted a little bit more towards the rise side. What's a little more interesting here is that our average rise is about 2.22%, our average fall about 2.14%, so call it both moves are within that plus or minus 2.5%, which might be a decent place to do something like launch an iron condor with the levels outside of. So to summarize, in this video, we covered the actual day of earnings, and we covered the post-earnings scenarios that we think are likely to happen based off of 5 years worth of data inside of Johnson & Johnson. As a summary for our pre-earnings, even though we're fairly close to it now, we expect a little bit more bias for price to continue to rise as we head into earnings, but we're very cognizant of the fact that this is a range we're just chopping in between of, and it's a fairly tight range at that, which we are towards the top end of. So that pre-earnings tendency may not necessarily pan out unless we get a break above the high of this candle, which is what we measured earlier. Then if we take a look at the actual day of earnings, we talked about the two different scenarios that stood out. One was if we gapped down and we had earnings beat, then that gave room for the gap to get filled. And the second scenario was the gap and go, in which if we had an earnings beat and we gapped up to the bullish side, then that gave us a scenario we could trade. Finally, we talked about the post-earnings scenario inside of Johnson & Johnson, and that was where really the thing that stood out was this plus or minus, we called it 2.5% range, in which you might do something like look for an iron condor for price to chop in between, or use those levels to craft a different strategy altogether. All right, I hope you found this video useful. Again, if you'd like to watch the full earnings guide, it's about 54 minutes long. Be sure to check it out. It's completely free, tosindicators.com/earnings. All right, take care, everyone. Good luck trading, and I'll see you in the next update.